All right. Good afternoon, Simpler family. Today is Friday, April the 11th. My name is Melissa, and I'm going to get started. I wanted to talk today about the first quarter of 2025. And let me start off by saying this: it was one of the hardest quarters I have traded in this market. Hey Doc, good to see you. It has not been easy. So, if you, like many, are struggling to find your footing in this market, just know, keep your chin up. It's okay. It is a learning opportunity. I hope that you are journaling in your trade journal and making notes of some mistakes maybe that you're making, what's going well, and that sort of thing. Now, for me, in the first quarter of 2025, I have actually been profitable, but again, it has not been easy. So, from my opening balance on January 1st of this year, my account has grown by 45%. January was tough for me, barely green, 2%. February was a good month, and March was a good month as well. Now, I went into this year, into 2025, by looking at price action on the higher time frame charts, expecting that we could see pullback and a more risk off environment for at least the first couple of quarters of 2025. And so when I noticed that, because mainly just due to the fact that the market was so extended above its EMAs. And it looked like it was due a pullback. Of course, with a new president coming into office, we will often, on the macroeconomic side of things, we will often experience increased volatility and such. So I went into this year with my focus mainly on the defensive side of the sector, trading names to the long side that do well in a risk off environment, such as consumer staples or utilities, gold, etc. So that was my mindset coming into the year. And so far, it is working out in my favor. But again, please understand that I do not believe it has been easy. It's actually ranks right up there with trading in 2022 most recently. So there's my equity curve for my account. You can see from January to March, it's going from the bottom left to the upper right, and that's what we want to see. Have I experienced pullbacks? Absolutely. As I said, hadn't has not been the easiest market to trade, but by being proactive on managing what is in my portfolio and at risk in this market has helped me a lot. Gold. Let's talk about gold. I have had 21 trades in gold this year. I've got three charts on here just to show you a few of my best trades in gold this year. Out of the 21 trades in gold, I have had 20 winners and one loser. So I'm pretty in tune as of right now with gold. That could change. I could get smacked in the face, but Going into a trade, obviously, I only risk what I'm willing to lose. And if I experience a loss in gold, it's not a big deal. I just move on to the next trade. This first example here is, if you don't know, I trade supply and demand. This green rectangle on my box or on my screen represents a demand zone. And as a supply and demand trader, when a name such as gold is in a strong bullish trend, I want to buy dips into demand. And on this trade here, that's exactly what I did, taking it up to where it made a new all-time high and exiting there. So entering here as price was in a demand zone and exiting as price made a new all-time high via a trailing stop. Great trade. Next up, this is more recent. It's a trade that we actually had on recently. Again, you see the green box on my screen. This represents daily demand zone on gold, and the red box up here represents a supply zone. So trading supply and demand, I was looking to go long in demand and covering at supply. On this trade, I entered in this demand zone. I had a couple of areas that I trimmed, and then, of course, I exited right before that supply zone at the purple line on my screen, which is a trendy edge, a upper monthly edge, where I went ahead and took my profits there. Now, since this trade, gold has actually went on to make new all-time highs. At this point, I'm more focused on day trading gold until we get a pullback into a demand zone. And if you're interested, whenever I finish going over all my trades, we will look at that demand zone that I'm looking for my next swing opportunity in gold. And finally, here is another gold trade. The thing that's going to stand out to you is that green zones are my ticket to entry for gold. So I entered this trade with a option premium price of $3 a contract, exited the trade option premium price $6.27, making this a winner of $327, so over 100% per contract. All right. I don't only trade gold and I don't only swing trade. I also day trade. I also don't only go long or buy calls. I will also buy puts. This is an example of a SPY day trade that made 192% in at $2.12, out at $6.19. As I said, this is a day trade, and this red rectangle here is what we call the PMZ. That stands for pre-market zone. It's my favorite indicator by far for day trading. It is so simple. If once price moves below this PMZ, we're looking to go short. I went short here, again entering at $2.12 a contract. And of course, I want to cover in demand. I traded this basically from supply to demand for a quick $407 a contract, or 192% here. This was a great trade that we were in and out of the same day. So I am especially concentrated on more day trading than swing trading right now. Here's an example, and that's not the chart. Ah, darn. Well, heck, the Walmart chart, remind me and I will pull this up. But Walmart was another great trade. I talked about that my focus for swing trades is more in the defensive areas of the market, and Walmart fits that bill. Consumer staple, I had a bullish trade on in Walmart. I bought a pullback to a demand zone and then took profits at the golden fib level, which luckily we took profits there because price turned from that golden fib level and went back down into the demand zone. But we were in and out of the trade for 106% profits. And sorry, I got the wrong chart up there, but I can pull up the trade here at the end. But I was thinking about this as I was going back and looking at my account and picking out my biggest winners, my best trades. And I was thinking about it and I was like, that's great. I'm not a toot your horn type of trader. I really, really just don't like that, to be honest. I think proof of concept, my account and my best trades, and the fact that my account is green in the first quarter of 2025 is really showing you that by trading supply and demand in the trendy trading room, I am able to not only find great setups for me to trade, but also all of the trendy family. We educate, Trendy John and I do, on setups and how to trade supply and demand, and that part of it is by far my biggest passion. I love l more than anything else, more than my account being green, more than me, getting profits in this market. I love when the members in our room are able to duplicate the process that we teach every day and find success in trading in this absolutely crazy market. So, all of those trades showing you my P&L and how my account has grown over this year is great. But what's more important to me is to talk to you about some key things that are helping me find success in trading in 2025. The first thing is the trend is your friend. I know we've all heard that and we all say that, and that sounds great, but you know, it's never been more important than in the current market conditions that we're trading in. Some of us, or some of you, may have never quite experienced this type of market volatility and a downtrend, to be honest. If you have only been trading for a year and a half or so, even 2 years, if you weren't around for the bear market of 2022 or 2020, then this might be new to you. Well, a key takeaway that I want you to focus on in Q2 of 2025 is you need to focus on bullish trades on stocks that are in bullish trends. Okay. So for swing trades, this is important. And for by swing trades, I mean trades that you're intending to be in for 2 days to a month. Those shorter term swing trades, I have found that it is much easier, much less stressful if I am looking for bullish trades to trade names that are in bullish trends. So keep your focus on those defensive areas of the market if you like to play the upside. Names such as GLD or the gold futures or GDX, the gold miner ETF, or the main names inside of GDX, such as AEM or NEM, just to name a couple. That area of the market is in a bullish trend, and you will find that trading those names to the upside is going to be a lot less stressful than trading the popular Mag 7 everybody wants to be in, Apple, Nvidia, Amazon, Tesla, etc. And I'm not saying that you can't put on bullish trades in those names, but what I am saying is that if you focus on the names that are in bullish trends for shorter dated swing trades, I find that it is a lot less stressful of trades. The second key takeaway that I've written in my journal multiple times over the last 3 months is don't be greedy. This is not the market for that. What do I mean? You are not trying to have huge wins in this market. Small wins are great and small wins add up. I might be in a trade that only profits a couple of $100, but if I am managing my trades and not being greedy, 5 of those small wins turns into $1,000, 10 turns into $2,000, and those small wins will add up and help you to build your P&L from the lower left to the upper right. Take what the market gives. If you're in a trade and price has moved to your target, please don't fall into the hopium camp. What do I mean? Well, you had a profit target and price moved there very rapidly, and you get a dose of hopium, hoping that, hey, this is the end of this bearish trend and we are going to go up and go back to all-time highs. So I'm not going to take my profits here as I planned because tomorrow is going to be a follow through day. Please don't do that. Take what the market gives you. And if price continues to the upside and you're out of it, it's okay because your original plan was to take profits where the price originally moved to. Follow that plan. Next key takeaway that I have been focusing on in the first quarter and the second quarter is with the increased volatility, I have shifted my focus to more day trading because you never know what's going to happen when the bell rings at the end of the trading day and you get up the next morning and I mean, what last year we didn't see this. You can get up the next morning and the market can be down over 100 points. That's cray cray, all right? So I have shifted my focus to more day trading or longer term swing trading, meaning I've been buying out, whereas before this year, before Q1 of 2025, I might buy expiration for a swing trade 2 weeks out or 4 weeks out. Now I'm buying expirations out 2 months, 6 months, and definitely 12 months. So if you are just a swing trader, I'm going to encourage you to give yourself more time to expiration and trade higher time frame charts. If you're a supply and demand trader like I am, then I want you looking at weekly demand zones, some daily demand zones, but I would rather that be in names that are bullish trending. If you're looking for swing trades to the downside in this bearish market, then look at the daily supply zones and focus there on names that have really taken a beating in this market. If you get a quick pop up into a supply zone, then look to take the trade to the downside. Don't be scared to buy some puts and swing them out for a couple of weeks or a month. I wouldn't take longer term swing trades to the downside because the market has pulled back so much, but there's nothing wrong with trading a 4 hour or 1 hour, or sorry, 1 day supply zone to the downside. But again, even with trading to the downside, don't be greedy. Take what the market gives you. You don't have to be looking for lower lows. Take what the market gives you and trade your indicators, your levels that are on your chart, and take the wins when price gets to your targets. Now, last but not least is this. I also have a long term investment account that for the 90% of the account, is all in equity. And it's in those popular names that I mentioned earlier, such as Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, those names. I have been trading equity in this market for over 25 years, and I trade it using supply and demand, just like I do for day trading and swing trading. But I'm here to tell you this year is giving us a sell. So I encourage you, and I'm not saying you have to do this, obviously. I'm not telling you what to do, but I am using this opportunity to build equity positions in my long term accounts. I have not going full allocation at what I believe to be a bottom, but I am slowly adding in to my equity positions in my long-term accounts because this market, the S&P 500, has had a 20% pullback. That doesn't happen every year, guys. That means you're being given an opportunity. Okay, you're being given an opportunity to shop your favorite names on sale. In any other case, except for the stock market, for some reason, people are always looking for a bargain. Yet, as traders, the fear of losing money creeps in and we get scared to buy Apple when it's on sale or to buy Meta when it's on sale. So rather than looking at your 401k or looking at your investment account and feeling blue because it is red or you're seeing your balance drop right each week, I want you to turn the mindset around to, hey, I've got this much cash available to me. How about I take advantage of a sell and slowly start building into some names, some companies that I believe in, that I believe are going to be around, that pay good dividends, right? We have a great opportunity that's occurring right now. So I encourage you, take advantage of the sale. That is what I am currently doing. All right, as promised, I told you since gold is by far my best trade of the year, I told you that I would give you my next buy the dip opportunity on GLD by using demand. All right, here it is. Right here. This is my next buy the dip opportunity on gold. Now, price is all the way up here at 297. As you can see, we made a new all-time high today. So I'm going to change this level right here. And you might say to yourself, yeah, but price never going to come back there. You might be right. But in the event it does, I want to give you what my plan is. My next swing trade opportunity on gold is this. Right here, we created an inside and up candle formation that is demand. So my intention is to start my next swing trade on GLD down here at 282 area. Then I will add to this trade between 277.87 and 274.10. That's where I'm going to add more options contracts. Then I am wrong on this trade. If the demand zone has a daily, right? We're trading a daily time frame. If this candle, a daily candle closes below 272.58, then I am wrong and I will stop out for a loss on this trade. As far as where am I looking to trim or take my profits, this would be my target right here, 296 to let's say 300 right here. This is my final target. In the event that we get a pullback to this demand zone and even into this lower level of the demand zone, then I want to be taking profits down in up here as price recovers from demand. So starting the position here around 282, adding to the position as price pulls back into this green zone, then I want to be taking profits. My first target 285.51, then 290, and the ultimate target 296 by 300. All right, so that is my next trade opportunity in gold. And I'm going to go ahead and move that alert up. So if this alert goes off, I will know that gold has set up into a swing trade, and I will be choosing more than likely the May monthly expiration for this trade. Now, the Walmart trade that I showed you, but for some reason did not capture the, um, what do you call it? The chart. I'm going to show you again. I remember exactly when I took the trade. It was back here in February. Price had pulled back into a demand zone. We entered the trade on this candle pullback here, and we exited the trade here at supply. So that was the Walmart over 100% winner. I was trading a demand zone here back up to supply. Then someone asked, what are my on sale levels for some of those big popular names and where am I adding into equity positions. So I will give you some of those levels as a little bonus here on Apple. My last ad on Apple was 175. I trimmed some at 192. Then I would be trimming at or around 203, 210, 220. If price continues to fall, my next ad on Apple is 160. As far as Amazon goes, and I only have time to do this last one, but I bought some here at 166. I've already trimmed twice on that buy, but my next buy is 154. All right, if you want more information about how we are trading supply and demand and conquering this crazy market, join us in the trendy trading room here at Simpler Trading. uh, I look forward to trading with you. I will see you again here in the Essentials Room next week. I hope you have a wonderful weekend. Much love, fam.